What if I told you that a single threat from Saudi Arabia nearly upended the global financial system? Stick around to find out how the kingdom flexed its economic muscles and sent shockwaves through the corridors of power in Europe and beyond. But before we dive in, make sure to hit that like button and subscribe to our channel for more eye-opening geopolitical insights. Now, let's unravel this high-stakes game of financial chicken. In the complex world of international finance and geopolitics, few moves can send shockwaves quite like a threat from Saudi Arabia. And that's exactly what happened earlier this year when the oil-rich kingdom hinted at a dramatic step that could upend the global financial order. According to reports from Bloomberg, Saudi Arabia privately warned G7 nations that it might sell off some of its European debt holdings if the group decided to seize nearly $300 billion in frozen Russian assets to help Ukraine. This veiled threat, delivered behind closed doors, sent diplomats and financial experts scrambling to assess the potential fallout. Let's set the stage. The G7, consisting of the world's most advanced economies, had been mulling over the idea of using Russia's frozen foreign assets to fund Ukraine's defense and reconstruction efforts. It seemed like a straightforward solution: take money from the aggressor to help the victim. But in the world of international finance, nothing is ever that simple. Enter Saudi Arabia, a country that has long played a pivotal role in the global economy thanks to its vast oil reserves and strategic investments. The kingdom's finance ministry reportedly conveyed its disapproval of the G7's proposal to select allies, with one insider describing it as an implied ultimatum. The message was clear: mess with Russia's assets, and we'll mess with yours. Now, you might be wondering, why does Saudi Arabia care about Russia's frozen assets? Well, it's not so much about Russia as it is about the precedent such a move would set. If G7 countries can seize Russian assets today, what's to stop them from doing the same to Saudi assets tomorrow? It's a classic case of, today you, tomorrow me, thinking. But there's more to this story than just Saudi Arabia looking out for its own interests. To truly understand the weight of this threat, we need to dive into the concept of the petrodollar and its importance in the global financial system. The petrodollar arrangement, which has been a cornerstone of the global oil trade for decades, essentially means that oil is priced and traded in US dollars. This system, which emerged in the 1970s, was an informal agreement between the United States and Saudi Arabia. The Saudis agreed to price their oil in dollars and invest their surplus oil revenues in US Treasury bonds. In return, the US provided military protection to the kingdom. This arrangement has been a win-win for both parties. For the US, it ensured a steady demand for dollars and US debt, allowing it to run large trade deficits without tanking its currency. For Saudi Arabia, it provided security and a stable investment outlet for its oil wealth. As David Rundle, former chief of mission at the American Embassy in Saudi Arabia, explains, the Saudis have placed stability in the market long-term over short-term profits. And the reason for that is that they have a lot of oil. They want oil to remain a significant part of the global energy mix for the foreseeable future. This long-term perspective has been crucial in maintaining relatively stable oil prices over the years. The Saudis understand that if oil prices become too high or too volatile, consumers will look for alternatives, potentially threatening the long-term viability of their primary export. Now, let's consider what Saudi Arabia's threat means in this context. By hinting at the possibility of selling off European debt, the kingdom is flexing its financial muscles. It's a reminder to the G7 and Europe of just how much economic power Saudi Arabia wields. The total amount of Saudi holdings in Eurobonds and French bonds could amount to tens of billions of euros. While that might not seem like a huge amount in the grand scheme of things, the real threat lies in the potential domino effect. If Saudi Arabia starts selling, other countries might follow suit, leading to a significant drop in demand for European debt. This could have serious consequences for European economies. Lower demand for government bonds typically leads to higher interest rates, making it more expensive for governments to borrow money. This, in turn, could slow economic growth and potentially trigger a recession. But the implications go beyond just the bond market. Saudi Arabia's threat also highlights the risks of Europe's dependence on the kingdom for oil. While Europe has been working to diversify its energy sources, particularly in light of the conflict in Ukraine, Saudi Arabia remains a crucial supplier. If relations between Europe and Saudi Arabia were to sour over the Russian asset issue, it could potentially disrupt oil supplies to Europe. This is particularly concerning given Europe's ongoing efforts to reduce its reliance on Russian energy. Losing Saudi Arabia as a reliable oil supplier could leave Europe in a precarious energy situation. It's worth noting that Saudi Arabia has been gradually shifting its geopolitical alignment in recent years. The kingdom has been strengthening ties with China, the world's largest oil importer, and has shown interest in selling oil in currencies other than the US dollar. This gradual move away from the petrodollar system could have far-reaching consequences for the global financial order. As one financial analyst put it, Saudi Arabia's threat is a stark reminder of the interconnectedness of global finance and geopolitics. It's not just about oil anymore, it's about the entire structure of international trade and investment. The Saudi threat also comes at a time when the kingdom is trying to diversify its economy away from oil dependence. Under the ambitious Vision 2030 plan, Saudi Arabia aims to develop other sectors of its economy, including tourism, technology, and renewable energy. This economic transformation could potentially alter Saudi Arabia's role in the global economy and its relationships with Western nations. However, it's important to note that Saudi Arabia's economic diversification efforts are still in their early stages. The country remains heavily dependent on oil revenues, which account for about 87% of budget revenues and 90% of export earnings. This dependence on oil gives the threat to sell European debt its teeth. Saudi Arabia still has significant financial clout derived from its oil wealth. The Saudi threat also highlights the delicate balance of power in the Middle East. Saudi Arabia has been a key U.S. ally in the region for decades, but recent years have seen some strain in this relationship. The kingdom's apparent willingness to challenge the G7, a group that includes its longtime ally, the United States, suggests a growing confidence in its ability to chart an independent course in global affairs. This shift in Saudi Arabia's stance could have significant implications for global efforts to address climate change. As one of the world's largest oil producers, Saudi Arabia's cooperation is crucial for any meaningful reduction in global carbon emissions. If the kingdom feels its economic interests are threatened by Western policies, it might be less inclined to support global climate initiatives. The situation becomes even more complex when we consider the broader geopolitical context. Russia's invasion of Ukraine has already reshaped global energy markets, with Europe scrambling to find alternatives to Russian oil and gas. Saudi Arabia, with its vast oil reserves, could play a crucial role in filling this gap. But the kingdom's threat suggests it's not willing to be a passive player in this new energy landscape. As one energy policy expert noted, Saudi Arabia is sending a clear message. It won't simply fall in line with Western policies. It's demanding to be treated as an equal player on the global stage, with its own interests and priorities. This assertiveness from Saudi Arabia comes at a time when the global order is already in flux. The rise of China, the increasing economic power of the BRICS nations, and the challenges to U.S. hegemony are all contributing to a more multipolar world. In this context, Saudi Arabia's threat can be seen as part of a broader trend of emerging powers asserting themselves on the global stage. The implications of this shift extend far beyond the immediate issue of Russian assets. It raises fundamental questions about the future of the global financial system. Will the US dollar maintain its dominance as the world's reserve currency? Will we see a move towards a more diversified system of international trade and finance? These are questions that policymakers and financial experts will be grappling with for years to come. For Europe, the Saudi threat presents a particular challenge. The continent is already dealing with the economic fallout from the COVID-19 pandemic, the energy crisis sparked by the war in Ukraine, and ongoing efforts to transition to a greener economy. The prospect of losing Saudi Arabia as a reliable partner for both oil supply and debt purchases adds another layer of complexity to an already challenging situation. European leaders will need to carefully weigh their options. On one hand, there's a strong moral and strategic argument for supporting Ukraine by using frozen Russian assets. On the other hand, alienating Saudi Arabia could have serious economic consequences. It's a classic example of the often conflicting demands of geopolitics and economics. The situation also highlights the limitations of economic sanctions as a tool of foreign policy. While freezing Russian assets seemed like a powerful move in the immediate aftermath of the invasion of Ukraine, the Saudi threat demonstrates how interconnected the global financial system is. Actions taken against one country can have unexpected ripple effects across the entire system. As we look to the future, it's clear that the global financial landscape is likely to become increasingly complex. Countries like Saudi Arabia are no longer content to play by rules set by Western powers. They're demanding a seat at the table and a say in how the global economy is run. For Western nations, this will require a delicate balancing act. They'll need to find ways to uphold their values and strategic interests while also accommodating the growing assertiveness of emerging powers. It's a challenge that will require diplomatic skill, economic acumen, and a willingness to adapt to a changing world order. In conclusion, Saudi Arabia's threat to sell European debt if G7 nations seize Russian assets is more than just a financial maneuver. It's a stark reminder of the complex interplay between geopolitics, energy policy, and global finance. As the world grapples with the aftermath of the Ukraine conflict, the ongoing challenge of climate change, and shifting global power dynamics, the actions of countries like Saudi Arabia will play a crucial role in shaping the future of the international order. The coming years are likely to see continued tension between established Western powers and emerging nations seeking a greater say in global affairs. How this tension is managed will have profound implications for everything from energy markets to climate policy to the structure of the global financial system. As we navigate these choppy waters, one thing is clear. The era of Western dominance in global finance is coming to an end, and a new, more complex, and potentially more volatile era is dawning. And there you have it, a deep dive into the high-stakes world of international finance and geopolitics. If you found this analysis enlightening, don't forget to hit that like button and subscribe to our channel for more in-depth explorations of global affairs. Your support helps us continue bringing you these crucial insights. Thanks for watching, and we'll see you in the next video.